You're watching Elon Musk Tesla News. Subscribe for more daily news on Elon Musk and Tesla stock. Tesla's stock just skyrocketed by 20% in a single day. Yes, you heard that right. 20% in just 24 hours. It's all thanks to their shocking Q3 earnings report that nobody saw coming. But here's the big question. Is this the beginning of a massive rally for Tesla or just a temporary spike before the market settles down again? Stay with me, because today we're diving into the numbers, Elon Musk's bold plans, and the future of Tesla's stock. Things you can't afford to miss if you're considering your next investment move. Now let's get into the details of Tesla's Q3 earnings report that stunned everyone. Tesla didn't just meet expectations, they shattered them. Analysts had predicted a gross margin of 16.9%, but Tesla came in much higher at 19.8%. And when it comes to adjusted earnings per share, the company reported $0.72, significantly outperforming the average estimate of $0.58. This margin boost shows that Tesla's electric car sales are far more profitable than anticipated. But it doesn't stop there. Tesla also reported a staggering $2.7 billion in free cash flow this quarter, giving them plenty of capital to fund future innovations like self-driving tech and affordable EV models. This incredible performance wasn't just about beating estimates, it signaled to the market that Tesla is back on track for growth, especially with vehicle deliveries growing 6.4% quarter over quarter. This marks the first time Tesla has recorded sequential delivery growth in 2024, and it's a clear indicator that demand for Tesla vehicles is not only stable but increasing. It's these figures that had investors flocking to the stock, driving the price up by 20% in a single trading session. But here's the real question. Could these numbers be a sign of bigger things to come for Tesla's stock? And what does this mean for the EV market as a whole? If you're holding Tesla shares, you'll definitely want to stick around as we break down more of the earnings call details and what Elon Musk had to say about Tesla's next big moves. Let's talk about one of the most exciting highlights from Tesla's Q3 report, vehicle delivery growth. Tesla saw a 6.4% increase in vehicle deliveries quarter over quarter. Now on the surface, this might not seem like a huge number, but here's why it's crucial. It's the first time in 2024 that Tesla has recorded quarter-on-quarter delivery growth. Think about that for a moment. This isn't just about meeting delivery targets, it's about exceeding expectations in a challenging market environment. What's even more promising is that this growth trajectory is happening despite economic headwinds like rising interest rates and global supply chain constraints that have plagued the auto industry. Tesla's ability to push through these obstacles and deliver more vehicles shows not only strong demand, but also improved operational efficiency. The company's strategic moves, such as optimizing production lines and expanding capacity in key markets, are starting to pay off. And here's where things get interesting. Elon Musk has hinted that Q4 deliveries might come in significantly ahead of Wall Street's estimates. This could mean that we're looking at a major earnings beat in the next quarter, setting up the stock for another potential surge. But could this trend continue into 2025, especially with Tesla's new models on the horizon? If these numbers are any indication, Tesla might be gearing up for an explosive run. Now let's dig into Tesla's future guidance, because this is where things start to get really exciting for investors. During the Q3 earnings call, Tesla's management didn't just provide optimism, they laid out a roadmap that's catching everyone's attention. Tesla is projecting 20 to 30% growth in vehicle sales for 2025, which would translate to as many as 2.3 million deliveries. That's a massive leap, especially when you consider that no other major automaker in the EV space is hitting these kinds of growth numbers. But why is this so significant? Well, it's simple. The stock market loves growth, and when a company like Tesla, which is already trading at a premium, shows it can accelerate that growth beyond expectations, investors take notice. This kind of bullish forecast has led analysts to reconsider their price targets for Tesla, with some predicting a significant upside if the company continues to deliver. And it doesn't stop at vehicles. Tesla's management also mentioned that the company's energy business and AI developments are expected to expand, potentially driving even higher revenues in the coming years. This multifaceted growth strategy is a key reason why the market reacted so positively to the earnings report. Investors see not just a car company, but a tech powerhouse that's diversifying its revenue streams. So with these projections on the table, the big question becomes, will Tesla actually deliver on these bold promises, or are we looking at overly ambitious targets? And how could these forecasts influence the stock's performance in the short and long term? As we get deeper into Tesla's strategy, these are the questions every investor needs to consider. Next up, let's dive into what Elon Musk had to say during the Q3 earnings call, because as always, his comments are critical for understanding Tesla's future direction. Musk didn't hold back when outlining his vision for Tesla, and it's clear that he's thinking beyond just electric vehicles. He's emphasizing Tesla's transition from being a car company to becoming a leader in autonomy, energy, and AI. And this shift in focus has a huge impact on how investors view the stock. One of the most exciting parts of the call was Musk's prediction of 20 to 30% vehicle sales growth in 2025. But what really got investors buzzing was his confidence in Tesla's ability to start production of its new, more affordable models as early as the first half of 2025. Imagine a Tesla EV that's accessible to a much larger segment of the market. This could completely transform the competitive landscape. Investors know that if Tesla can deliver on this promise, it will not only expand its customer base, but also drive revenues and profits to new highs. Musk also doubled down on Tesla's autonomous vehicle strategy, highlighting plans for a robotaxi network. He believes that full autonomy is not only achievable, but could be a reality sooner than most people expect. If Tesla can pull this off, it will revolutionize transportation, and the company could dominate a new multi-trillion-dollar industry. This kind of bold ambition is what makes Musk's leadership so pivotal for Tesla's stock. His vision often becomes a catalyst for major market movements. But here's the key question. Can Musk's confidence translate into real results? Is Tesla really on track to roll out these affordable models and achieve full autonomy within the next couple of years? Or are these just lofty promises designed to keep investors on board? Stay with us as we explore how these plans could shape Tesla's stock trajectory and the future of the EV market. Now, let's talk about one of the most game-changing announcements from Tesla's Q3 report, the launch of a more affordable electric vehicle, set to be in production in the first half of 2025. This move has investors and market analysts buzzing because it's not just about expanding Tesla's lineup. It's about making electric vehicles accessible to millions more people worldwide. Tesla's current lineup, while successful, is still positioned as a premium option for most consumers. But with a new, cheaper model on the horizon, Tesla is targeting a much broader market, those who have been waiting for an affordable EV that doesn't compromise on quality or performance. This strategic shift could open up a huge new revenue stream for Tesla and fundamentally change the competitive landscape. If successful, Tesla could dominate both the premium and budget segments of the electric vehicle market, leaving little room for competitors to catch up. And it's not just about affordability. Elon Musk has hinted that this new model will incorporate some of Tesla's latest technological advancements, such as full self-driving capabilities and a more efficient battery design. This means that Tesla's budget option could still be packed with features that no other automaker can match at a similar price point. For consumers, it's an attractive proposition. For investors, it's a signal that Tesla is pushing the boundaries of what's possible in the EV space. But here's the million-dollar question. Can Tesla really deliver on this ambitious timeline? Production delays have plagued the industry, and there's always the risk that the rollout could face obstacles. However, if Tesla pulls this off, it could ignite a wave of demand that not only boosts their stock price, but also redefines the standard for the entire auto industry. Is this the start of a new era for Tesla, where EVs are truly affordable and mainstream? The next steps will be crucial in determining if this vision becomes reality. Tesla's Q3 report wasn't just about cars. One of the standout stories that's gaining traction among investors is the massive growth in Tesla's energy business. Tesla isn't simply an electric vehicle company. It's becoming an energy powerhouse, and the numbers prove it. In the past quarter, Tesla's energy storage deployments surged by 75% year over year, setting a new record. The energy business, which includes products like the Powerwall and large-scale battery systems, is becoming a crucial pillar in Tesla's growth strategy. Why does this matter so much for investors? Well, it's all about diversification. By expanding its energy division, Tesla isn't just relying on car sales to drive revenue. The energy business offers high margins and steady growth, which can help balance out the ups and downs of the auto market. And as the world transitions toward renewable energy, the demand for Tesla's energy storage solutions is likely to increase, providing a steady stream of income that could significantly boost Tesla's overall valuation. Tesla's success in the energy sector also has broader implications. With governments worldwide pushing for green energy initiatives and renewable infrastructure, Tesla is positioning itself as a leader not just in EVs, but in the entire clean energy ecosystem. This puts Tesla in a unique position to capitalize on both consumer and commercial markets as they provide energy solutions that can power homes, businesses, and even entire cities. So, with Tesla firing on all cylinders, both in its automotive and energy divisions, the question becomes, could the growth of Tesla's energy business be the secret weapon that propels its stock even higher? And what does this mean for Tesla's overall strategy in the next few years? As we dive deeper, we'll explore how this side of the business is reshaping Tesla's long-term outlook and what it means for investors who are betting big on the company. Now, let's put Tesla's 20% stock surge into perspective by looking at the broader market context. In the past year, Tesla's stock has experienced extreme volatility, meaning 93 instances where the price moved by more than 2.5%. This level of fluctuation isn't unusual for Tesla, but a single-day move of 20% is rare, even by its standards. This tells us that the Q3 earnings report didn't just exceed expectations, it shifted the market's perception of Tesla's future entirely. But why is this such a big deal, especially now? The broader market is facing multiple headwinds. Interest rates are still high, economic growth is slowing, and investors are on edge as they anticipate the outcome of the upcoming US presidential election in November 2024. These factors have contributed to uncertainty, causing major indices like the Nasdaq and S&P 500 to waver. In fact, just 23 hours before Tesla's surge, its stock dropped 2.6% as the broader market reacted negatively to the latest economic data. Despite this backdrop, Tesla's strong earnings and guidance managed to cut through the noise and send the stock soaring, indicating that the company's fundamentals are powerful enough to defy broader market trends. Additionally, we're in the middle of an earnings season that has been anything but predictable. Companies like Starbucks and Boeing recently reported disappointing quarterly results, causing their stocks to tumble. Yet Tesla's performance stood out, highlighting its resilience even in a turbulent market. Investors are seeing Tesla as a high-growth, high-potential stock, one that could benefit immensely if the economic environment stabilizes or if interest rates begin to fall. But here's the thing. Is this surge a temporary reaction, or could Tesla's performance set a new standard in a market filled with uncertainty? Will Tesla continue to outperform the broader market, or could these macroeconomic factors eventually catch up? Stay tuned as we dig deeper into how Tesla's strategic moves could insulate it from broader market risks and potentially set the stage for even more growth. Now, to really understand Tesla's potential, we need to compare its performance and strategy with other major players in the auto and EV industry. Tesla's third-quarter earnings and the subsequent stock surge didn't just happen in a vacuum. It highlights a stark contrast between Tesla and its competitors. Right now, Tesla is the only profitable EV company in the market. While other automakers like Ford and GM struggle to break even with their electric vehicle divisions, Tesla is pulling ahead with strong margins and consistent growth. For instance, Tesla's operating profit margin hit 10.8% this quarter, the highest level since early 2023. Compare that to competitors, many of whom are still operating their EV divisions at a loss. And it's not just the legacy automakers that are falling behind. Rivian and Lucid, despite their innovative designs and tech-forward branding, have not been able to match Tesla's scale or profitability. These companies are still in the ramp-up phase and face enormous production and financial challenges that Tesla overcame years ago. Tesla's advanced production techniques, such as its gigacasting and battery innovations, have given it a significant cost advantage, allowing it to maintain profitability even as it scales up production. This dominance isn't just about today, it's also about the future. Tesla's strategy includes the introduction of more affordable models and a focus on autonomy, which no other automaker has yet managed to match. While companies like Volkswagen and Ford are scrambling to catch up in the EV space, Tesla is pushing the boundaries with its robotaxi network and next-generation vehicle platforms. Essentially, all others are playing catch-up. Tesla is setting the pace for the entire industry. But this brings up an important question. Can Tesla continue to widen this gap, or could rising competition and economic factors eventually slow it down? With its competitors struggling and Tesla making bold moves, is this the start of Tesla becoming a true monopoly in the EV and tech space? Stay with us as we explore Tesla's long-term strategy and what it means for the stock's trajectory. So, with everything we've explored so far, from Tesla's impressive Q3 earnings to its strategic growth plans and its dominance over competitors, the big question remains: is this the start of a massive rally for Tesla's stock? Based on what we've seen, it's not just possible, it's likely. Tesla's strong fundamentals, its ability to deliver profitable growth, and its diversification into energy and autonomous technology set it apart in an industry that's struggling to keep up. Let's not forget the upcoming introduction of more affordable models and advancements in Tesla's robotaxi network to transform the company's business model entirely. If Tesla manages to achieve full autonomy and launch these cheaper vehicles on schedule, it won't just be leading the EV market, it could be dominating the entire transportation industry. This would open up new revenue streams and potentially increase the stock's valuation significantly, far beyond its current levels. However, it's important to remember that this rally isn't without risks. Tesla faces a volatile economic environment, with interest rates still high and geopolitical uncertainties, especially with US elections on the horizon. Yet, Tesla's track record of navigating challenges and its focus on innovation suggests that it's well positioned to overcome these hurdles. So, if you're an investor, this could be a pivotal moment. Will Tesla continue its ascent and become the most valuable company of all time? As Elon Musk boldly predicts, the opportunity is there, but only time will tell if Tesla can capitalize on it. If you're betting on Tesla's future, now might be the time to buckle up, because the next chapter could be the most explosive one yet. And before you go, make sure to hit that subscribe button so you don't miss out on our in-depth updates as this story unfolds. And remember, this is not financial advice. Always do your own research before making any investment decisions.